Hi there, everyone. It's Ifti from Extreme Returns. And today we're going to be covering a financial analysis of one of the stocks in my portfolio, Zalando. I think that's how you say it. German company, but we're going to come on to that very soon. So my name is Ifti 𝙋𝙧𝙤𝙤𝙤𝙀𝙀𝙤. I'm on Etoro as Extreme Returns. By background, I'm a chartered management accountant. I've worked with big companies like Unilever and Mars. I carried on in the corporate world by working for recruitment consultancies, and then I did headhunting as well. I decided after many years in the corporate world to set up my own business, started with an estate agency, did that very successfully, and then decided to go more recently into car hire peer-to-peer, and I'm the largest in the UK with my family on Toro and Getaround. So at the moment, 13% year to date, 5.3% in March. We're on the 16th of March, 38 copiers. Thank you to each and every one of them. I have also 335 followers. Thank you very much, guys and girls, for following. Appreciate it. So Zalando. Zalando's here. You can see that 12.8%. It's a core holding of mine. This is what their website looks like. As you can see, clothes, shoes, sports, accessories, beauty, design, brands. It's got quite a range of products. Let's jump across to Stockopedia. So you can see Zalando is 18.6 billion market cap. Enterprise value is less by about $1 billion. And as you know, if enterprise value is less than the market cap, the company has net cash. That's good. And we're going to come on to all of the financial metrics in just one moment. I just want to give you a quick summary. So Zalando SE is a Germany-based online shoes and fashion retailer. The company offers a portfolio of women, men, and children clothing. Its assortment comprises of shoes, clothes, accessories, and so on. For more than 1,500 brands, including fashion companies, designer work, and products of Z Labels, a private labels arm of the Zalando company. They also talk about how they do free shipping and 100 days free return policy. You can purchase their products from 15 European countries. So it's interesting that I like to get a lot of companies which are outside of the normal US tech companies. If you look at most of the holdings in Etoro, so many people concentrate on tech companies. There's a lot of good value in the rest of Europe. So without further ado, let's have a bit more look at the financials of Zalando. This is one of the main things I look at, the compound annual growth rate. You can see 24% increase year on year. In 2014, it was 2.2 billion euros. It grew to 2.9, 3.6 billion in 2016. Kept on growing at a very good rate. 2017, it's 4.5. 2018, it jumped to 5.4. 2019, 6.4. And 2020, just under 8 billion. This year, they're expecting to do nearly 9.5 billion euros of sales. That's very impressive. Pandemic or no pandemic, they're still growing. And also, if you look at operating profit, it's been going up. There have been some bumps on the road, 2018. And if you look at net profit, it's a bit lumpy, but you'd expect that from a company that's growing. At least they are profitable. And we'll look at the profit margins in just one moment. PE ratio is very high. Now, this is one of the things about this company. It is rated almost like a tech stock rather than a clothes company. Operating margin, I'd say that's really low. And for retail, that's reasonable, and that's what you'd expect from retail companies. However, for an online company, I'd expect something higher, but I think that's because of different factors, some of which we'll look at later. Return on capital employed, again, quite low, and it's all over the place. It went from 5% up to 14, down to 7. So we will come on to that later as well. Operating cash flow, CapEx, and also free cash flow. Now, the free cash flow, I think this is one of the red flags for me. I would like to have seen positive cash flow, especially in 2017, 2018, but they were negative, largely, not exclusively, but largely because of the investment that they were doing. And you can see in the CapEx side, in 2017, they increased their investment by a huge amount per share. It was only 0.236 back in 2015, went up to 0.7, then 0.9 and 1.08. So they've been investing very, very heavily in the infrastructure. And that's one of the reasons they had negative cash flow. Having said that, they're sitting on a huge cash pile of nearly 2.7 billion euros. And if you look at their balance sheet, one of the things I like to look at is long-term debt. It's only 2.7 million. It's nothing. They've got hardly any long-term. I mean, even capital lease obligations, it's 481 million. And they didn't have that before at all. So in terms of a lot of the financials, I'm quite comfortable. But one of the things I do like to look at is something called the F-score. Now, the F-score is by a professor, Piotrowski, and he looked at a lot of basic questions. What he was looking for is a simple checklist. So Zalando passes 6 out of 9, which is good. It's not fantastic. It's not rubbish. It's good. So let's go through these questions very quickly. Is the company making a profit? Tick. Is it generating cash? Tick. Is it making more cash than it's reporting as profit? Tick. And I think that's a really important one, because that's the difference between cash and accounting. And you can use all sorts of tricks for accountancy purposes. But if you're making more cash than you're reporting as accounting profit, that's really good. Is it more profitable than it was last year? Tick. Is the company's long-term debt reducing or stable? Now, that's a negative, but I think because it's so low, as we've seen, I would actually not worry about that. In fact, I would have put a tick there. Is it increasing its ability to pay short-term debts? Yes, because it's generating a lot more cash. Is the company trading without having to raise funds from shareholders? Tick. Is the pricing power improving or cost reducing? No. And that is a problem. Is it more productive than last year? I don't know why they put it across there. I thought it was. Looking at the profits, and operating profit was more, and so was, I don't know how he looked at that. Anyway, that's the academics for you. There's a Z score as well. We're not going to go into detail, but the chances of it going bankrupt are low. And the chances of its earnings manipulation is also very low. The Benish score, it's called. Benish, sorry. I always get that mixed up. Now, if you look at some of the key ratios here, we've been through the PE ratio. Not paying a dividend, I think they should consider putting a dividend forward to shareholders, given that they're making profits. Recently, in the last month or so, they've been hit quite badly, minus 14% trailing to the market. But over the course of the last year, it's plus 84%, which is really good. One of the other things I just wanted to quickly look at is the major shareholders. Now, the reason I'm investing in this company is because of Baillie Gifford, who regulars will know of my channel. It's one of my favorite investment funds, and I look very closely at them. I share the same vision as they do with long-term investments, and they brought me to Hendrik Bessenbinder. I've made a separate video about that. Anyway, so Baillie Gifford, the other thing about it is that academic research shows that co-founders who grow companies to a large extent and remain invested in the business are more likely, those companies are more likely to succeed than other companies. So this is one of the co-founders. His name is Poulsen, Anders Holch. And there's another guy here, there he is, David Snyder. And if we look at their directors, which is down here, we see Anders Poulsen there, and we see David Snyder there. They're still running the company. David Snyder's their CCE. Now, one other interesting thing about this company, in terms of their shareholders, is that one of their biggest investors is a company called Kinnevik. I don't know how to pronounce that. Kinnevik AB Venture Capital. They hold 21%. That's very, very unusual. I mean, their stake is worth close to 4 billion pounds. And Baillie Gifford's is 1.9 billion pounds, which is a sizable amount. So Kinnevik are a Swedish investment company that was founded in 1936 by some rich families, active long-term owners and investors, primarily in digital consumer businesses. Now, Zalando isn't their only holding. They've got other companies as well, a lot more, in fact. These are some of their subsidiaries and some of their big holdings. So I think that says a lot about this company. If you've got long-term stable investors like Baillie Gifford and Kinnevik, and then the co-founders are also heavily involved in the company. I mean, take this guy, Poulsen, for example, his holding is 10%, which is 1.8 billion pounds. Now, if I've got that kind of investment in a company, I'm going to make sure I do everything I can to make sure it works. Now, jumping across to Seeking Alpha. Great, lot of great resources here. This is a little bit old, June 2020. It's by Tech and Growth. Now, I'm just going to go through this very quickly. And it says, with an ambition to reach 20 billion GMV, gross merchandise value, in 2023-2024, the company will need to be more than double its current 8.2 billion. Much of the growth will come from the partner program, and this is why they're, if we go back to, this is why their margins are so small. We saw this here, and also the return on capital employed is very low compared to an online business. It's more like an Amazon in terms of, in fact, let's have a quick look at Amazon's operating margin. Amazon's operating margin is there, very similar, slightly higher now. And also the return on capital employed is slightly better as well, but not too dissimilar. Now, through ZMS and ZFS extensions of the program, the company will onboard more brands into the platform, eventually driving more sales. The increase in order volume as a result will also drive efficiency in fulfillment, which still has room for improvement. In fact, if I was Jeff Bezos, I would be thinking of possibly buying Zalando. But I'm not. The Berlin-based Zalando presents an interesting investment opportunity in the fashion e-commerce space. It's the current market leader in Europe. The executive team, which still consists of the co-founders, has also executed very well. The company consistently grows its top line by 20% plus while maintaining strong unit economics. Going forward, we see various opportunities the company can tap into to achieve its 20 billion sales target in 3 years, in particular, the partner program. As with many Rocket Internet incubated companies focus on, although I don't think they've got a big holding anymore, I may be mistaken, Rocket Internet is a fantastic VC. Market share growth will consistently be the top objective for Zalando. For an e-commerce company at Zalando's scale, it makes sense to do so, considering optimizing towards growth means increasing order volume. I'm not going to go into that in too much detail. In the last 10 years, the company has invested in over 1 billion euros in warehouse assets. So do you remember where I was talking about the negative cash flow and the increasing capex here? That's the reason for it, 1 billion euros in warehouse assets. Even so, the current efficiency level demonstrates there is room for improvement. Looking at the last 5 years before 2019, gross margin has been steady at 40% plus, and marketing cost ratio continued to drop. And it talks about their partner program, and similar to Amazon. Now let's have a look at some of the potential downsides. So the author says, in our view, Zalando's pursuit of sales growth and being a one-stop platform for fashion has made the company a little bit too complex. In addition to the online services and logistic business, it has offline outlets where it sells excess inventory. In the meantime, it also keeps ramping up new businesses such as fashion curation service and software as a service for inventory management. While these units have been manageable so far, there is a potential risk of spreading too thin. Furthermore, being a highly complex organization, it is also in general prone to disruption. And that's about it. Good. Well, I hope that you guys got a flavor of Zalando, their financials and what they're about. And here's their website again. This has been Ifti from Extreme Returns. Please do consider subscribing to my channel. And also, if you wanted to know more about me, just type in my story, Ifti Uddin, and you'll come across this cool cartoon I made. It's 1.5 minutes long. I've been featured on the BBC, Independent, and other media outlets as well. Do also consider copying my wife. Her name is Adiba Uddin. Her stats are reasonable, but she looks at only Far East companies. So new technologies, Taiwan, Baidu, Nintendo, and so on. And I think that's where a lot of growth will be coming from. And finally, I've got my son. He's a doctor. He looks at companies that are going to make the world leave the world in a better shape. So he's got the green dream. Stats are fantastic, and he's got lots of interesting companies. Thank you very much. I'll see you guys very soon. Take care and bye.